And with that, ladies and gentlemen, it is time to begin. Let's get the percussion section ready. Our drummers, are you ready? All right, and please cue the trumpets. And ladies and gentlemen, the sounds of the trumpets, most of you know that means it's time to begin. Please put your hands together and welcome our hosts and presenters today. The first slide is up. Please welcome the Oil Trading Group.
All right. Thank you, Kevin. I'm assuming you can hear me okay here today. So, again, welcome everyone to this event here today. We're going to talk about the Oil Trading Group. And as you can see here from our first slide, every trader needs a plan. What's yours? So we are limited to a 60 minutes. We're going to try not to go over. In fact, we'll try to cut this a little bit shorter than 60 minutes. So I know everybody has things to do this afternoon. Again, I want to say thank you for being here today. We certainly appreciate the time that you spend here with us. So let's get started. All right, let's take a look here. Give me 1 second. As soon as I say let's get started, I need to get started. All right, here we go. All right, in our 60 minutes today, we're going to cover why a trade plan is important. We're going to talk about the components of the OTG trade plan. We're going to talk about market structure and the role that it plays in your trade plan. We're going to talk about trading strategies, trading tactics, and then we're going to go through a market review. All right, so let's keep going here. First of all, I want to introduce myself. Again, my name is Jason Love. I'm the founder and lead oil trader here at the Oil Trading Group. And I want to give you just a little bit of biographical background on me so that you kind of have a frame of reference for who I am and where I'm from. I'm a veteran of the U.S. Navy. I was in the Navy during Operation Desert Storm. That was not Iraqi Freedom, which is the one that started in 2003, but the one way before that, back in 1991. I was a young kid out of high school in the Navy and was on the ship that actually shot the first shot in Operation Desert Storm. Fast forward to getting out of the Navy, I started in an entry-level position in a travel call center. Was just your guy answering telephones, making travel reservations for people. And about 10 years later, I became the VP of a travel call center with 300 people. I was laid off of that job right after 9/11. Again, we were in the call center, and it was my responsibility. It was kind of a weird scenario where it was my responsibility to shut down the very place that I was working, and then basically get myself out of my own job. So after that, I said to myself that I never wanted to be in a situation again where I was beholden to someone else for my income stream. So I began this day trading career that we're on. I've been doing this for about 13 years. I have been fortunate along the way to meet some really good people, have some experienced mentors along the way. But a lot like many of us here, before I got kind of up and running and on my feet and those kinds of things, I studied and read and did a lot of the things that everyone does, right? And so I got into a trading room. This was sort of a funny story. It'll take just a second here to tell you, but I'd been doing some currency trading and some other trading and having a little bit of success, but not a ton of success. And I had been told that oil was the place to go and to take a look at trading oil. And so I jump into a trading room, a guy that was going to be doing trading room calls. And this was 6-7 years ago at this point. And I went through a series of 2 or 3 places like that before I decided to start the Oil Trading Group 6 years ago. But this was one of the first places that I went. And I tell this story in the room quite a bit, but I'll tell you here again. As I was sitting there and I was listening to this guy talk, and he was talking about this and that, and I would hear that familiar sound of a soda can, in the morning. So, I drink coffee. I don't drink coffee. I drink soda in the morning. Some people drink coffee for caffeine. I happen to drink soda. So I figured that's what this guy was doing. It was 7:30 in the morning Central Time. He was in the Central Time Zone. Pop in a can, one every 15 minutes for about 4 hours. And I said to myself, gosh, this guy must be wired for sound, right? That's 4 an hour times 4 hours. That's 16 of these cans. After 2 or 3 days in this discussion, I asked him, I said, so I'm a Diet Dr. Pepper guy. What are you? He says, kind of laughs and he says, "This isn't Diet Dr. Pepper. This is Coors Light." So the way that he traded every morning was drinking a 12-pack of Coors Light or more every morning. So I said to myself, well, there's got to be something better or a better way to do it out there. And I went around. And so we started the Oil Trading Group, and we've been around for 6 years. And that was kind of what led me on this journey to doing some of the things that we do here today. And I took a very similar career arc as we did in the call center. I started at the beginning, not really knowing or understanding in the call center. And then I got into day trading, and I had, like I said, I had some mentors. I had a veteran floor trader, traded for 30 years, gave me tons of insight into how the markets work and that kind of thing. And, you know, today we are the lead oil educator for Top Step Trader. We're going to talk some more about Top Step Trader in just a few minutes. But if you're not familiar with who Top Step Trader is, they are the leading provider of trader funding in the marketplace right now. All right, let's keep moving on. So let's talk about the importance of a plan. I just told you that I was in the military once upon a time, right? And so I like to think and act strategically and tactically. And one of the first business books that I read that applies here as well as it did then is Sun Tzu's Art of War. And one of the quotes in this book that I'm going to read to you here really rings a bell here when you start talking about importance of having a plan during your trading day. If you know your enemy, the market, and yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, the market, for every victory gained, you will also suffer a defeat. And if you know neither the enemy nor yourself, you will succumb in every battle. And simply put, if you know the market and you have a plan, and you understand how the market works, and you understand how your plan is, you have a really good chance of success. Are you going to win every day? Heck no, right? And anybody that tells you that you will win every day, well, you know what they say about that, right? So but knowing the plan before you head into the battle, right? And the market is your opponent, and every day is a battle for supremacy, right? You're trying to see if you can get, for that little moment in time, a little bit of edge in the market. And again, you would not go to battle without a plan, right? This plan or any plan is your tool to define your actions during the daily trading battle. And also, as you know, trading can be a lonely business. If you're working out of your home office, or you're working by yourself and you're not in a trading group, or you're not in a trading chat room, or you don't have a bunch of trading buddies, or you're not on a big trading desk somewhere, if you're sitting in your office by yourself, it can be a lonely business, right? We all know that. We all have done this before. And if we know that it can be a lonely business, the only person that's holding you accountable for your actions is yourself. And your plan is your physical reminder of what the best course of action for your trading account is at any given time, right? So that's why having a plan is important. That's one of the reasons why having a plan is important. So I'm going to show you something here before we go on. I'm going to talk to you a little bit about Top Step Trader and their fully funded account program. So in preparation for this, I've scheduled this event about a month out. And so in preparation for this event, I said I'm going to go through a fully funded trading account process with Top Step Trader. They have very specific parameters. They have a very good program to weed out traders who aren't really ready to be trading live, or to really ready to be trading live. And so they put you through a process. We take our room members through this process, and we started this process on, I'm going to show you here, I'm going to zoom in right here. We started this process on April 20th of 2016, and during that time, we went through the $50,000 combine. So let me tell you what the parameters of the $50,000 combine are. You have to hit $3,000 target. That's leg one. You have to hit a $3,000 target without hitting your max drawdown, and your max drawdown would be $2,500 during this window. And then after you complete that, you have to complete another leg where you trade a lot. You're restricted on the number of contracts that you can trade, but you still have the same risk parameters in place, et cetera, and you have to make $1,000. Okay, so we did this. If you go back up here to the date, we went from 420 to 511. We went through that entire funding process. So guys in our room who went along with us were ready and able to be funded on a fully funded $50,000 trading account in less than one trading month. Now, if you want to see more of the detail of what we did every day, you go to the website, and Kathy will put up, if you'll put up the category results section in here as a link, Kathy, you go through there and you can see every single day we have recorded that process that we went through. There's a video, there's text, it shows you the day-to-day screenshots of what we did as we went through that process. The reason that I'm showing you this is that we did this while following the trade plan on a day in and day out basis. All right, so let's talk one more time here a little bit about what is a fully funded account. Again, we're a partner with Top Step Trader. They are the leading company in funding trading talent, and the Oil Trading Group teaches traders how to become fully funded traders following their guidelines. All right? Members who started this process with us on April 20th were eligible to receive a fully funded trading account in less than one trading month. Now, I want to make sure that I'm being perfectly clear here and we're not misleading you. They're not going to send you a wire transfer for $50,000 to your Bank of America account or your Bank of Canada or whatever your bank of preference is. They are not going to wire you $50,000, okay? So I want to be clear about that. But what they are going to do is they're going to add you to one of their accounts, and they're going to give you the opportunity to have a capability of trading live funds in their trading account, right, up to the parameters that were set forth in the previous combine that you completed, all right? So, again, want to make sure you understand they're not sending you $50,000, but they're sending you an account with buying power up to, adding you to an account with buying power up to that point. We've had 19 traders complete this Top Step Trader Combine and become fully funded traders in the last, since we became their lead oil educator about 10 months ago. So anyway, I wanted to kind of give you that as the backdrop, and let's talk about the next piece here. It's important to understand that results are not typical, and here's what I mean by that. I'm going to walk you through the system we're using to get the results that we get. But please understand that my results are not typical because the average person who attends any training session gets no result. Now, I don't mean to be a pessimist or to be negative here by saying that, but essentially the bottom line is this. People come into things like this, they're expecting to find the Holy Grail. They're expecting to find that, hey, this system never loses. They're expecting to find something that is 100% perfectly accurate, and that thing never exists. It just simply doesn't exist. What I am going to do is share with you in this time together what's working for me. But again, what I'm not going to do is give you a get-rich-quick scheme. I'm not going to give you a trading system that never loses scheme. And I'm not going to give you a holy grail. Really, the only thing that I'm going to give you is a path, a course of action that you can follow. But in all honesty and in reality, you will only be successful in whatever it is that you're doing surrounding trading if you put in the work and the time, right? So I've been fortunate enough to be able to be put into some good situations doing things that I've done in my career, but it only has happened because I've been willing to accept and understand that work and all of those kinds of things get you to the end. So let's talk about the components of the trade plan. The markets are very chaotic. Okay, they're very they can be very unstructured to the naked eye. So what we try to do, and this is something that helps my approach with the way that I see things. We try to break the market down into components, okay? We try to break down the market into a state. What is the state of the market? Is it bullish? Is it bearish? Is it choppy or sideways? We then take that state and we define the structure of the market. We use price action and support and resistance levels to provide structure points in the market. And then we give you a strategy how to play those structure, the state and the structure of the market. So the strategy is involved around tactics and risk management, okay? So we call this the 3 S's of trading: market state, market structure, and strategy, or state of the market, structure of the market, and your strategy. And so if you can break it down into those three components, at least we think so, if you break it down into those three very organized components, you stand a good chance of taking a very logical approach to trading the market. All right, so let's take this on to the next slide. So when we talk about state of the market, we're going to give you our session bias, right? That is, like in this case on May 10th, we talked about the market state is characterized, it's a bull trend characterized by higher move highs and higher move lows. And as long as the market continues to hold structure, the bull trend is expected to continue. The market is in a corrective state, however, and does have the potential to turn south and transition to neutral or choppy conditions. So that's our idea of the structure. Now, our information about structure is derived from higher time frames, okay? So I'm not looking at a 1-minute chart. I'm going to talk to you in a minute just about that. But when you can get into sync with the higher time frame, it provides you with a context for your trading strategy. And what might be bullish or bearish on a smaller time frame may not be in the larger time frames. Let's take a look here just really quickly at this chart. All right, this is a 240-minute chart. And I just did some very simple drawings on this. There's nothing, earth-shattering or revealing about this drawing, but it's a very simple chart to show you that this market on a 240-minute chart is in a bull trend. So if you take a look at this low to this low to this low, that is 3 higher lows. If you look at the highs, these are a series of higher highs, all on your 240-minute chart going back to the low on the CL of February 11th. Having said that, you'll notice all of the pullbacks. There are several pullbacks that go on here. Let me grab this laser pointer. And you can see the different pullbacks that go on in each one of these rallies. So market rallies, pulls back, rallies, and pulls back. Now, I get this question all of the time in the trade room. Why are you going long when the market is clearly short? Right? Why are you going long, Jason, when the market is clearly short? Well, on a 1-minute chart, 3 hours worth of down movement, right? That's a bearish move on a 1-minute chart. 3 hours would be 180 bars. That would be a big move to the downside, or it would look like a very long move down on your 1-minute chart. But that's only one candle. It's not even one candle on your 240-minute chart. So these pullbacks here do not necessarily mean that the market is in a bear corrective turn, right? It may be just in a correction, but it's not in a bearish turn. You did break a structure point right here, but the market quickly rallied back up over that and then found new trend line for structure points. So my point of that is this. We take a look at the higher time frames to determine market structure. We also try to get in sync with the market and the structure of the market. It does not mean that we won't fade into a rally in a bullish market. It doesn't mean we won't fade. It just means that we'll be taking smaller targets. But what we're ultimately trying to do is get in line with the context of the overall trading state of the market. And that's what it is that we're trying to do. All right, so that is state of the market. Once we have identified the state of the market, we then provide you with structure. So that is key support and resistance levels. We identify those each day. The market, we break the market down into steps, and we expect the market to travel in between these steps. Go up to a step and rotate. Come back down to a step and rotate. And you can see some examples of that here. Market comes up to this step here. In fact, let's squeeze this in just a little bit. We'll zoom in here like this. So the market came down into this center point step, rallied to the minor step, rotated, came back down. Then you had, this is probably an inventory report day. Then you had a big rally on inventory, rotate, comes back up to a step, and then rotates out for the rest of the day. Same thing here. Step, rotate, comes up to the bottom of this step, into this step, rotate down, and back up. So we break the market down, and these are just 3 days on the CL. But trust me when I tell you, every day looks like this. This was Friday, by the way. I don't know if anybody traded CL on Friday, but there was a 77 tick range that was connected, or bound rather, by our structure points here on our chart. So we have a set of structure points that will identify decision areas based on the session bias or the state of the market on that particular day. We then break it down into structure, and then the meat of the bone comes in here. We give you a strategy. All right. So the strategy is then broken down into two components. We're going to give you a primary strategy based upon session bias for the day. And then we're going to identify the secondary strategy if the primary strategy is not playing out. Now, I'm going to show you in a later slide when I put this out, but I put this trade plan out the night before around 8 p.m. This trade plan will go out and it is delivered to you via the mechanisms that we have, the delivery systems that we have in place. I can't tell you at 8 p.m. that bull strategy is going to maintain itself for the entire session. So what I do is I give you this kind of if-then scenario. If the market stays and holds structure on the day, then your primary strategy is what's going to be in order. If that primary strategy or structure breaks, then your secondary strategy is the one that's going to take over. In addition to that, we give you pivot times and we give you retracement zones. So pivot times are simply the times of the day. We have two time frame studies. We have a higher time frame and a lower time frame where we expect the market to do something, and then we give you the probability for that direction that it's going to do that something. In addition to that, we have retracement zones, and the higher the time frame, the more reliable the time frame is. But on these retracement zones, we have a very specific way of looking at retracement zones that are unique to us. They're probably out there now because we've taught a lot of people, but at the end of the day, these retracement zones are measured from days high to lows or previous session highs to lows, and they provide you with very reliable places that the market should at least pause if you're counter trending, or it should begin to be the place where the market lifts if you are, or gets in sync with that higher time frame. So if the market's long and it retraces back to this long area, that's probably going to be a really solid zone for you to get in. So those are the strategies, okay? So we identify those strategies on your trade plan. Now, what is just as important to the strategy is the tactics. And so I'm going to talk to you about that in just a second. But to quote that book again, and Sun Tzu, strategy without tactics is your slowest route to victory, and tactics without strategy is the noise before defeat. So simply put, you may have a strategy. You may think that the market is long today, right? And that it's going to be long for the balance of the day. But if you don't have the right tactics to take advantage or the right structure points to apply your tactics to, then it really can be a very challenging process for you to be able to get to where you want to get to, right? It's going to be a slow route to victory. Conversely, if you have tactics and no strategy, right? I have a moving average cross that every time it crosses, I'm going to take it. I have a RSI that if it gets overbought, I'm going to take it. Well, if you have that tactic without a strategy and your structure points around it, then you're just going to get beat. You're just going to get your doors beat in. That's what's going to happen to you because you've got to have a combination. You've got to have a strategy and the appropriate tactics to implement your strategy around your structure point and understanding what the state of the market is. And that's some of the things that we do here. So let's talk about the tactics on your trade plan here. All right, so we try to take a very structured approach to your trading plan. So if you take a look up here at the top, we have session bias, and then we have the strategies that are based upon that session bias. And then we say, look, these are the levels. This is your tactic, right? This is an F1 tactic. You've got a B2, a B2, a B3, and the F2. And so you're saying to yourself, okay, well, that's great, but I have no idea what any of that means. Well, we provide you with a tactics worksheet. And so this tactic worksheet defines the setups that are optimal entry and exit points for the trading strategy. This worksheet is broken down into breakout trades, and I'll go ahead and zoom in on this here a little bit. I'll do it this way so we can get a better. All right. So this is broken out into breakout trades and fade trades. This document is about 8 pages long, but it sits right on top of my desk. And so when I say we've got a breakout strategy that is well, let's do it this way. We'll go back one slide. And if you take a look here, your first tactic on this area is the F1 fade tactic, okay? That's your F1 tactic. So if you go to the next slide and you take a look here at the tactics worksheet, this is your F1 trade entry. And so it gives you the rules, the entries, the targets, the exits, and all of the different things that apply to this particular setup. So we're giving you the structure, we're giving you the state of the market. Sorry, I drew a blank there for a second. State of the market, structure of the market, a strategy, and then the tactics. And this tactics worksheet goes along as your companion piece to the trade plan. So again, it's broken down into F1, F2, F3, and the breakout trades are categorized as break one, B1, B2, B3, and B4. But as we give you levels in the market that you're going to play, strategies around those levels, the structure points, and the strategies, we also give you this tactic worksheet as well. Now, this tactic worksheet are the suggested entries and exits for each given strategy or tactic. Please remember that each one of you needs to clearly define the risk that is appropriate for your own account. I'm going to come back to that in just a second. I'm going to do it now. I don't specifically go through and tell you where your target is. I do tell you where the targets are. That's okay. What I don't do is tell you what your risk should be. I give you a suggested idea, like for the CL as an example. I may tell you the suggested stop is 10 to 12 ticks. Okay, I may tell you that. I may say, look, your suggested stop on this is 10 to 12 ticks, and that is what we may trade in the trade room. That's maybe the way we do it in the trade room. But let's look at it like this. If you have a $10,000 trading account and you take you say, I'm going to trade what he's trading in there, which is 2 lots, right? I'm going to trade 2 lots in there. And so if you take 2 lots at 12 ticks, that's $240 worth of risk. Well, if you've got a $10,000 account, that's a 2.4 risk to your account. That is above best practices, industry standards, whatever, right? So that may not be the best risk for you. So it's your money, it's your account. You have to do what's right for you and your account. That's why we do Top Step Trader Combines. We try to get everybody into at least a $50,000 account so that they can go through and have a fully funded, properly funded trading account so that they can have and trade the proper amount of risk. The other thing that goes on these things is this. You've got we all have different personalities. We all come to trading from different places. So I've been in the military. I've been in a management role. I've been, that's been my path. Other people come to it from their own particular paths, and the way that their lives have shaped their views and belief systems, right? That is something that is absolutely the case. So you may not, I say that to say this. I'm the kind of guy that likes to fade entries, right? So if the market's coming down, and I am the guy that likes to buy low and sell high. I like to fade entries. So you may say to yourself, heck no, there's no way I'm going to stand in front of the train. I'm going to catch a falling knife. You may say that. And you know what? When I say it like that, it doesn't sound that appealing either. But I do like to fade entries, right? So the market's coming down. I like to find my setup, oversold, 15-minute chart, into one of my major support resistance levels. I get in and off we go. If you're the kind of person that says, look, I need that to confirm, I'm going to look for a breakout trade. I'm going to have the market come down into this level, rotate, set me a boundary line somewhere, and then once it breaks, comes back and retraces, and then once it breaks that boundary line, then I'm going to look to get long or short, right? And that's okay. That is your personality style. So the first 2 categories, the market state, that's not going to be changing based on your personality, right? The market state is what it is. It's either long, short, or sideways, depending on the way the market's behaving. The second thing that's not based on your personality are the structure points, right? Those structure points are places where price action has been in the past and has found support and resistance in that area, and that has zero to do with your personality. Where your personality comes into play is the way that you execute the tactic on that strategy. So if you are a breakout trader, you feel comfortable getting confirmation in a particular area, then if I say I'm going to fade this area, then you have to manage around that. If you are a fade trader and I say this is a breakout area, then you have to manage around that, right? We are giving you tactics based on what we think are the best opportunities at particular places on the chart, but it's your responsibility to fold those into your trading personality, and hopefully that makes sense. And finally, the thing with anything like this, it's your money and your account. You must do what is best for you and your individual situation, right? So, all right, so that's the tactics worksheet. The final thing that I want to leave you here with before we look at a few charts is I want you to leave you with this. The way that we look at this is a very organized approach to a trade plan. Markets are chaos. And again, you need to have that organized approach, being both strategic and tactical in your thinking is how you're going to define your trading edge. So if you start at the top, what is the state of the market? Is it long? Is it short? Is it sideways? What's the structure point in the market? Where are the places on the chart that we should find support and resistance? And then once we get there, what's your strategy? Are you going to break out of that level? Are you going to fade that level? What are you going to do when you get there? And then the tactics will define how it is that you play those strategies once you are there. So before we move on to chart review, I want to talk to you about how the plan is distributed. The plan is distributed in a couple of different ways, and we do it at around 9 p.m. Central Time here in the U.S. for the next trading session. The markets that are covered under our trading plans are two of the most popular futures markets that are out there. It's the E-mini S&P and the light sweet crude. We could do more. We don't do more. The reason that we don't do more is that's a lot, right? If you trade the ES and the CL, you can do everything that you need to do forever and for always, right, without trading other places. Now, we all have our favorite markets, and I'm going to show you it at kind of later in this thing how you can apply some of the principles and tactics to other markets. But for the trade plan itself, we do the S&P, E-mini S&P, the ES, and the CL. All right, so you get the way that it's distributed in two ways. If you became a member of our group, we have a back office for the oil trading group, and we have sections. This is not all of the sections. It's just kind of a snapshot. But you can see here where it says CL trade plan. You would just simply click this button, and it would download for you. PDF would download automatically. You could print it, or you could keep it in your browser. You also have the trading tactics worksheet. And then the secondary way that we can distribute this to you is we have an indicator built specifically for NinjaTrader, bolts to the top of your chart, and you click OTG trade plan, and up pops the trade plan for you. Okay, so let me see if I can skillfully stop this presentation for a second here, and let's drag some charts over in front of you here. So I'm going to just take the last couple of days here. So Kathy, if you'll throw the link in here, turn off the camera. Okay, very good. Camera off now. Okay. So, Kathy, if you will throw into this box down there the OTC link, I've got 5 videos, something like that, of trade plan recaps from the previous week or two. But what I'm going to do right now is I'm going to turn the camera back on and see if I can get this. Can you see the entire screen at this point? Hopefully. Okay. Yep, perfect. Let's see here. Just want to make sure. Kathy's typing me here. Okay, so I'm going to assume for a minute till she finishes this up here. Okay, you got the projection. Good. Okay, so this was today's chart. Okay, so this was our trade plan here for the day today. So we put this out. You see it's the 17th. This is the ES. I'm not going to go through just a bunch of charts. I've got, like I said, I've got on that link that Kathy threw up there, it says OTC. That is, you can take a look. There are 4 videos on there. 5 videos. If you go to our website, we have 400 Vimeo videos posted on our Vimeo channel. We have tons of videos. I'm not going to spend a ton of time going through charts, but I am going to go through just here really quickly. This is the ES chart for today, right? So we started out by saying, look, the market can present difficult trading conditions in this neutral type of idea. There's going to be opportunities on both sides of the market, et cetera, et cetera. And then you come down here to market maker levels. Given today's neutral session bias, the best play is to fade the first time touch levels of your market maker levels. All right. So I'm going to turn off everything on here and just leave you with this blank chart. Okay. I'm going to go back here to around 8 a.m. right here. All right. And at 8 a.m., we have our market maker levels that form up. And they are called, our first set of levels are called the daily structure levels, the DS levels. And they are first time touch longs based on being one tick ahead of the level. Okay. So in the trade room today, it hit this thing 3 times. We eventually got filled. We captured just the chart. Okay. Can you see the whole screen with the Word document as well? No ES chart. Okay, let me try it again. All right, let's try to do it this way. I'll try it one more time here. Okay, can you see the ES chart now? Okay, can you see the ES chart now? I'm going to say yes, you probably can. Cool. Okay, very good. So let's do it this, well, you won't be able to see that. We're just going to leave it here on the ES chart. Take my word for it when I tell you that it's on the trade plan. How's that? We have our daily structure levels up here, right? You have your daily structure level here, and it is one tick. There is a triple bottom on your 5-minute chart. We eventually got filled in the room. We had a 2-point target, and you went from 2058 quarter all the way up to 206275. Okay, so that is a market maker level. Because, and this is on your trade plan, right? So because we did not reach the structure target on the other side, then you would be looking to take out the structure target down here at 205275. Okay. Another thing to note here is we have the low down here today at 205675. I'm going to turn off the camera and then I'm going to refocus it onto the trade plan here. Hopefully you can see that. If you look here at the trade plan, rally above 2068 or higher, then sell off on a breakout below the center point level with the sweet spot being 205675. That's the level that you wanted to break this morning. That's the level you wanted to break. Okay? So we're going to turn the camera off. We're going to put it back on the chart here, and I'm hoping that you can see that. So as the market continues to come down, when it broke, right, it comes all the way down. It broke your 205675, made a low at 2055 half. Your target, because you did not hit this target above, this is the rules of the market maker levels, you would be looking for the structure target underneath you. Market comes down, rallies back up, and then takes out the daily structure target underneath you here, right? So you had the breakout of the center point here that went 205675 before it rallied, made that low at 2052 half. So there was 4 ES points there. You came down to your daily structure target, and then your final trade, nothing else really on the trade plan. Your final trade comes down here, and I'm going to move this to a 15-minute chart. The final move comes down today at your market structure signal on your oversold conditions on your 15-minute chart. You came right down to your market maker level, found support, market structure, and you had the tactic to get long underneath the oversold condition. So you rallied here from the market structure signal at 2038 quarter, rallied all the way up to 204575 on the move back up. And that was all spelled out on today's trading plan. So that was all available to you the night before. This is all the information available to you on the previous night. So let's take a look at the day before. Let's take a look here at the day before. So make sure I'm getting the right. That's the 11th. That's too far. Let's take a look at the 16th. Okay, here's the 16th. Okay. So because of the nature of screen sharing and things of that nature, I'm not going to try to show you the trade plan for the 16th. I'm just going to show you how it played out based on a similar type idea that we had the day before, or today rather. So we're going to take a look here. We're going to go to daily structure signal. All right. So at the open, you had your daily structure signal form up, and you would be long off of this daily structure signal looking for this structure target up here. That's the idea. Again, you know what? I am going to show it to you just so you can see. Put that over here. And let's see here. We'll move this down. So turning the camera off. Yeah, I'll come right to the CL here in just a few minutes. We'll take a look at the CL. Here is your market maker. This is your trade plan on the ES. And again, same thing. Market maker levels. Given today's neutral session bias, the best play is to fade these first time touch levels against those different areas. So we're going to turn this off, and we'll go back to the chart here. And again, daily structure signal here to target is what you're looking for. The market rallies up through that zone, and then I want you to see how you end the day on your market maker levels, right? So you come back up here, you get your final revision signal set here at the end of the day, and then of course this is a 15-minute chart, so it's not quite as clean or easy to see. But you came right up into your daily revision target off of this long, again, on your market maker levels up to that revision target. These are all tactics, trading tactics on your trade plan for the ES. Let's take a look here. And for the sake of time, I know that we had a request for a CL. And, of course, we're CL traders in here, so let's grab the CL chart here. Here is... I'm just going to grab this one's an easier one to do here. This is May 3rd. And we'll just come back here. Okay, I know you can't see anything here, guys, so give me just a second. I know you can't see anything. So I will get this all in place here so you can see it. Okay, so let's go here. And we're going to go here too. Okay, so there's the trade plan for the 3rd. Okay, this is the trade plan for the 3rd. We were taking, it's the secondary short here, the secondary strategy. So we said the market was going to be in a bull trend on that day. And when I show you the chart, you'll be able to see that the market wasn't not necessarily, it was breaking structure points. Okay, and I'll show you that structure point break in just a moment. And we said that 44.12 to 43.95 with the sweet spot at 43.95. So we were going to look for a breakout below 43.95, then retrace back to 44.12, then a move back down through 43.95. Okay, that is what we were looking for. All right, so keep that in mind. I'm going to refocus you in on the chart here. And one more time here, just want to make sure that you can see this. There is the chart for this day. All right, so 44.12, a break below 44.12, okay, which is right here. Let's move this down to a 5-minute chart. And we want to go back to the 3rd. Sorry about that. Okay. There is a breakdown through 44.12. That's this area right here. We said a break through 43.95. There's 43.94. A rally up to 44.12, and then the sell-off. And that was the trade plan for the 3rd of May. And that's just a really clean example of this was put out the night before. It goes down through 43.94, back up to 44.12, and then you flush all the way to the low down to 43.35. That's almost 100 ticks. That's 70-odd ticks on that move down. So today's trade plan, as you know, as a CL trader, the CL market, and I'm gonna show you back over here. If you take a look back here on, let's go back to the 15-minute chart. So take a look at today. We have that F1 tactic, which is a fade when you get oversold. This was the best opportunity today. This happened around 6:45 a.m. We came down into one of our structure points here. You oversold just barely, but you were oversold nonetheless on your 15-minute chart, and then it rallied for the rest of the day. that fib retracement area that I told you that we have a sweet spot that's on our trade plan, that played out for us. We actually took this one in the room today. It was short here at 16. So 16 came down as deep as 91. So there were 25 ticks on this little choppy move. If you've traded the CL over the last couple of days, you know that the market is really consolidated into some fairly narrow ranges. It wasn't until about 2 o'clock that you actually had a nice breakout here, right? And that was at 2 o'clock this afternoon. That was after the pit close. And if you go back into Friday, it was only a 77 tick low to high. Here's what I'm saying about the trade plan as it relates to slow days. It keeps you out of the chop as well, right? So it'll take you and keep you out of the chop. So even though there hasn't been this big Herculean move that we all like to see on the CL, what it has been able to successfully do for us is been able to keep you out of choppy trading conditions, right? And that's important too. So Kathy has thrown the link to the OTC. So it's oiltradinggroup.com/OTC. I've got 4 trade plan, about 15, 20 minute in length trade plan reviews on that particular site. I'm going to start trying to wrap this up here. I know we've got a limited amount of time, but if you want to take a look, there's a lot of videos there. If you go to oiltradinggroup.com and take a look at the site, there are a ton of Vimeo videos out there as well. So let me put the screens back up here. Give me a second, guys. I'll get your PowerPoint screen back up, and we'll begin to start wrapping this up here. So just give me a minute. And I do appreciate everybody being in here today, by the way. It is certainly a pleasure to talk to all of you today. So go back to where we were. We'll bring the camera back online here, and there we go. Hopefully you can see the PowerPoint now. All right.